Yo, what's up everyone? It's your boy Looney, and today we're breaking down a passive income showdown. We're going to put up to the test of dividends versus option selling and see which strategy is better right now in 2025. And if you're like me and just looking for ways to earn money without staring at charts all day, this one's for you. But before we jump into it, quick shout out to the Discord. It is free to join, and then I also have a premium membership, which is available for coaching, trade alerts, and my selling options course. And I also do some giveaways and more. Links to it are in the description. But let's set the stage. Right now, in 2025, my covered calls are in a tough situation. If we're being honest, the market is totally running up, and we're seeing a bull run, and something like SoFi where I have multiple covered calls that are deep in the money, and I have to manage these. So let me try and pull these one up right now. So I have my SoFi position. I have 400 shares, currently up 52%, but my options I'm down almost 400% or 450. And if we go to this $15 call, these 4 different calls, I'm in the money. And it's not because I set up this trade this way, but it's because I've been doing a roll. So I've been rolling from 14 to 15, and now I'm going to have to roll again. And I might have to pay it just like I had to pay for this one. Now, this isn't a bad problem to have. All this is really I'm just missing out. I'm missing out on those massive gains. Because if I didn't have the covered calls running, I'd be up that $2,000 or 2,300. But now I'm only really up like 1,900 or 2,000. So I'm still getting gains, but the covered calls are working against me. And these are just hedges. And also I'm just trying to roll. So when this one gets close to expiration, I'll plan to roll this one to $16 and just keep doing this until it's at a point where it's above the current stock price, and therefore it is out of the money, because I do plan to own SoFi. Now, on the other hand, cash secured puts are in a similar situation. The premiums are a lot weak. They're a lot weaker. They're a lot less expensive. So your premiums aren't as good. And I'm a proponent for selling options consistently for that income. And I do, but right now it is not the best time to going crazy in selling options. And we can look at the VIX, for example. This goes over volatility and is down to 16. And once it goes under 15, that is a time that things are not volatile and a spike is kind of due to happen. So right now, the premiums on the options are not great. And that's why I do have cash. I have 4,500 just sitting in cash and just waiting for an opportunity to sell puts. Now, it doesn't mean I'm not selling puts at all, but it does mean I am lightening up on my sizing. Because you can see here, I still have a ton of Mara puts, but I did these when it was spiking and Mara overall was volatile. And I still have 6,500 in Mara that are locked up in these option trades. And I'm just going to let these expire either worthless or close them out for a profit. But that's the true situation going on with selling options. They are very good, but as of now, you're not going to outcompete the market in this current condition. With this bull market, it is hard to outcompete it with selling options. And that's why I want to look at dividends. And even though they are slow, they are consistent. So whether the market's hot or not, companies that do dividends are still dropping cash in the account. But the yields are not massively high. So I have a few stocks that do pay dividends if we look at the big names like Walmart and some other ones that I did get paid these dividends, and it's very small amounts because I do only own a very small amount. But that's the biggest issue with dividends. You do need a massive size to actually earn a significant amount of dividends. And you can do your research on which one pays the most dividends or which one is the best opportunity. And it's really up to you what you're looking for. Because I know MSTY, I've heard that it pays really good dividends, but it's pretty volatile. So I wouldn't say that's the greatest one. But overall, that is the biggest issue. You do need a lot of capital to get that dividend. And the best upside to it is that it's consistent no matter what. If the stock goes down or stock goes up, you're still getting paid that consistent dividend no matter what. You're never going to be in a situation where you have to manage your position, where you have to cut your losses. I mean, you might have to cut your losses if the stock drops significantly, but dividend stocks are a lot less volatile, and you're not going to be in a situation where you're going to have to roll. You're going to have to do a net debit to manage it. There's a lot less management. You could just simply collect the cash and then reinvest it. So what's the best thing to do right now? And I would say a mix of both. If you want higher potential income and you're really just trying to take advantage of every step, I would do both. I would do a lot less selling options right now because of the market we're in. That doesn't mean you shouldn't sell options, but your position size should be pretty limited to what you were doing compared when it was during the volatile times. And I know it's pretty difficult to say because people weren't investing during the difficult times. And that's one way to get ahead of things, is to buy when others are scared. And by buying when others are scared, you could sell options, and it's even safer. And that's why selling options are very good in any kind of market condition. And I'm not doing as much. So you can see I have that 4,500 just sitting there. But if you do want a safe, and we're in a bull market, so it's relatively safe to just keep your cash in a dividend, you can just leave it there and collect that monthly or quarterly amount of dividends. And it's a lot more passive because you don't do any kind of management. Plus, you're not really risking assignment or losses from a market breakout, because right now, if the market shoots up, my covered calls are in a situation where I have to pay for it and they're in the red, whereas with dividend stocks, you just get more dividends. So you get more opportunities towards the upside with dividends rather than selling covered calls. So here's the question. Would you rather earn slow and steady from dividends, or just roll the dice with selling options for potentially higher but a little less reliable income? Let me know in the comments. And if you want help building your own income portfolio or trading system, join the free Discord. Premium is just $8 a month if you want that extra access. As always, stay patient, stay sharp. Peace.